I know it took almost 15 rounds. That is what you said, with little give and take, the deal is now taken a shape. Can you give us the major contours of the deal for both the countries and each of the countries?
Yes, of course. I mean, let's not forget, we actually have a very good trading relationship already. It's 43 billion at the last count. The deal by 2040, from the projections and the modeling that's been done, will increase that by another 25 billion if it goes to plan. So that's quite a nice additional set of trade between the two countries. Congratulated both countries on achieving a pretty historic milestone in their trading relationship over many decades. This is probably one of the most symbolic outcomes of our two nations talking to each other. And FTAs are quite a tough and difficult thing to get over a line, and hence why it's taken almost 3.5 years to do, because these are not 1 or 2 years worth of relationship. These are decades. And if it wasn't going to be a win-win scenario, neither system would have accepted it and aligned with it.
Good afternoon, everyone. Welcome to our Ringside View. As you know, we always pick up the most appropriate topic to understand from the eyes of the experts and ask pertinent questions. Today, I'm very happy to invite on this UK FTA deal, apart from our chief guest, my two co-hosts and panelists. Let me introduce them to you all. Mr. Manish Singh is the Chief Investment Officer. Hi, Manish.
Hi, welcome.
At Crossbridge Capital, a global wealth and investment advisory firm. He oversees global strategy across multi-asset portfolios spanning public markets, alternatives, and structured solutions. His team manages more than 3 billion of AUM across their offices from London, Singapore, and Dubai. Over a 20-year career, Manish has worked at the intersection of global equity strategy, quantitative research, and macros across UBS, Societe Generale, and Manish brings deep macro insight, market intelligence, and a global lens shaped by his leadership experience across capital markets, be it in Europe, Asia, and Middle East. He is a CFA charter holder and IIT Bombay alumnus with a master's in finance from Cranfield School of Management. Welcome, Manish. We will be looking forward to a very positive contribution from you and interactions with you.
Thank you very much, Amisha. I look forward to it.
Let me also introduce my co-panelist, Mr. Anuj. Anuj is the Group Chief Economist with Welspun Group. Anuj is the Group Chief Economist at Welspun World, where he leads macroeconomic and sectorial strategy. With over 15 years of his experience, he has worked across economic policy, corporate strategy, and capital cycle analysis, with deep experience in manufacturing, infra, cement, auto, real estate, and prior to Welspun, Anuj was held key positions at Mahindra Group, Ultratech Cement, and Crisil. And as we all know, that textile will be one of the biggest beneficiary of this FTA. So it will be very interesting to know how Anuj is also looking at the overall UK trade agreement. And Arsh is our economist at PL Group. Arsh is the one. Arsh, we look forward to see you too. He's the one who has put together such magnificent team for us today. And we are all waiting for Mr. Harjinder Kang to join us. We'll be checking your patience a bit. In the meantime, let me utilize to, give a little background of this entire agreement that India and UK have signed. They say UK FTA is a trust-first blueprint for global trade, unlocking $120 billion of target across services, power, and UK capital for a multipolar world. Post-Brexit, post-pandemic, UK-India FTA forges new investment-centric trade era, and it eliminates tariffs on 99% of Indian exports, and India exports constitute nearly 2% of overall UK imports, and it stands at about 15 billion in current year 24. Notable sectors such as machinery and electronics, fuels, chemicals, textile, clothing, edible, fruit, footwears, plastic, rubber, animal product constitute nearly 72% of exports to UK. Importantly, these categories have traded surplus with the UK, and in our view, these categories can be major beneficiaries of the FTA, along with some other sectors such as auto components, engineering goods, sports goods, gems and jewelry. This FTA we expect will positively impact manufacturing across both labor and technology intensive sectors. 6 billion export boost for textile engineering goods seafood with 99% tariff-free access. We also see a powerhouse pact driving tech exports and mobility. This pact integrates services too. In services, India serves exports to UK are 18 billion. Services exports to UK are about 18 billion and is the second largest IT business service market for India after US. India has secured liberalized regimes for IT, which complements India's push to anchor tech services exports. Around 2,000 short-term visas annually for chefs, yoga instructors and creative professionals are a nod to India's soft power diplomacy. This creates a new corridor for UK pension, ESG, infra capital into India's debt and equity market also. A new era of trust-first trade reshaping global alliances. From a macro lens, this deal signals three major shifts. As our economy team sees, first, India is moving from tariff-first to trust-first trade strategy. Second, post-Brexit, Britain is recording its Asia strategy away from dependence on China. And India offers a democratic, and demand-rich counterpoint. Third, the FTA provides hedges against the fragmentation of globalization. India is anchoring into like-minded democracies while retaining autonomy on domestic regulatory levers. If it is going to take little time, just inform us.
Yeah, ma'am, he's having a technical issue.
Okay.
So we're on call with him, trying to guide him.
No problem. So what I'll do is I'll also use this time to introduce he himself while he'll not be able to listen to me, but it will be interesting for audience to know who our guest is today. Mr. Harjinder is one of the most influential voices shaping the United Kingdom's trade diplomacy in Asia today. As UK's Trade Commissioner for South Asia and British Deputy High Commissioner for Western India, he leads the UK government's effort to deepen commercial, investment and strategic ties across India, Bangladesh, Sri Lanka, Nepal and Maldives. Crucially, Mr. Kang served as UK's chief negotiator for India-UK Free Trade Agreement. His stewardship over the agreement's most complex chapters, intellectual property, government procurement, and core market access positions him uniquely to speak on how trade policy frameworks are built, balanced, and future-proofed. Prior to this role in government, Harjinder Singh ji held a distinguished career at AstraZeneca, from starting as a chemist in R&D to eventually becoming global commercial director. He was instrumental in shaping global strategies to expand access to affordable medicines across emerging markets. Whether decoding the architecture of 21st century, FTAs, or translating pharmaceutical complexity into opportunity, Mr. Kang brings unmatched perspective to the table, making him a defining voice for a pivotal moment in global trade alignment. Why, there he comes, finally. Welcome, sir. You are on mute. You need to just unmute yourself.
Hi, good afternoon, and
Good afternoon.
huge apologies, but Zoom and government computers don't mix. Just a lesson for the future.
True. So what I did while you were just getting joined, I introduced you. I introduced my co-panelists, Mr. Singh and Anuj, and I also gave a little background as we understand of this deal. So we can straight go over to your views and start the session. I hope that is okay.
Yes, of course. Wonderful. And good afternoon, everybody. A huge apologies for the late start, but better late than never, as they say. Wonderful to be here. And as some of you may know, I was the chief negotiator of this deal when it was kicked off in January 22 until May 23, when I actually joined the system here as the UK's Trade Commissioner for South Asia and the Deputy High Commissioner, West India. So wonderful to do it, the sort of enablement of the FTA, both from the UK side and also from here, and seeing firsthand what the industries of India and the UK both want out of a particular thing called a free trade deal. This was, as you all know, finalized and concluded as a set of discussions a few weeks ago between our two ministers, Minister Goyal, who I saw just yesterday, and Minister, our Trade Minister, Jonathan Reynolds. He and the two of them finalized the deal. The PMs spoke and essentially congratulated both countries on achieving a pretty historic milestone in their trading relationship over many decades. This is probably one of the most symbolic outcomes of our two nations talking to each other. And FTAs are quite a tough and difficult thing to get over a line, and hence why it's taken almost 3.5 years to do, because these are not 1 or 2 years worth of relationship. These are decades, and so need to be done properly and so forth. And and you never get everything. That's the other thing. You get a good enough deal which makes both systems happy. And if it wasn't going to be a win-win scenario, neither system would have accepted it and aligned with it. So overall, I'm very delighted that it's actually got over the line. As a Brit of Indian origin, it's extra special that this has actually happened. And it's a symbolic signal of the deepening relationship between the two countries. And it starts the ball rolling for many other things. And our Foreign Secretary, when he was on stage not so long ago, actually made a statement which said that the FTA is the floor of our relationship, it's not the ceiling. So it starts here, on which we then now build. And I thought he put it beautifully when he said it that way. So let me leave it there as a sort of, really exciting time for our, business investment and general geopolitical relationship between the two countries.
Lovely for this beginning. I know it took almost 15 rounds, but the best is that, as what you said, with little give and take, the deal is now taken a shape. Can you give us the major contours of the deal
Yeah.
for both the countries and each of the countries?
Yes, of course. I mean, let's not forget, we actually have a very good trading relationship already. It's 43 billion at the last count. The deal by 2040, from the projections and modeling that's been done, will increase that by another 25 billion if it goes to plan. So that's quite a nice additional set of trade between the two countries. In terms of the sort of things that each side has liberalized, they're all being reported widely in the press, and so I can reiterate all those things again, but you know what they are. Certainly from the UK side, it was the obvious. It was whiskey was made the headlines everywhere, and when you have tariffs of 150%, reducing down to 40% over time, 75 to start with, 40 over 10 years. It's actually quite substantial, and India is the largest whiskey market in the world. So, certainly from the UK side, it was a key ask, should we say? Certainly on the UK side, advanced machinery, medical devices, electronics, cars, lamb. We respected India's sensitivities in terms of agricultural products and so on, so we didn't push that too far, and neither did India push into the UK agri sectors, because they are very, very sensitive for both sides. For India, it's the things that you'd expect, textiles, clothing, footwear, gems, jewelry, the things that India is very good at: tea, spices, ready-to-eat food, and so on. So all in all, balance in terms of tariffs, 99% of Indian goods into the UK will be tariff-free. 91% of UK goods into India will be tariff-free. That's a pretty good outcome. There are 1 or 2% that we feel are very sensitive to our sort of industries which are being left, and India is the same. Overall, the tariffs that will be cut for the UK side, effectively when the deal comes into force, is about 400 million sterling, and eventually gets into about 900 million by 10 years. And it's pretty good. And in terms of other big things, certainly services is a big aspect for both economies. And India is 50% a service economy. The UK is almost 70-80%. So it's a very important component of any discussion. And we've basically agreed quite a few areas that are going to be sort of baked into a treaty, which helps on those things. And certainly 36 sectors, such as computer-related, business-related, professional services-related sectors, they're all, again, will be, if they're not already in detail, will be out very soon. Contractual service suppliers, that's a big ask for various of the IT sector, for example. There's been a lot of temporary people who come over and stay for a year, 2 years to deliver a service and back. A lot of commitments in there. Certainly, one of the things you'll have read about is a double contribution convention, which is essentially, people who are going temporarily to deliver services at mode 4's delivery will effectively not pay national insurance contributions in the UK, essentially up to 3 years. So that's really good, because I used to do this. You may know I was in industry. We used to send people temporarily abroad to do either technical jobs, leadership jobs, general management jobs, but they were always temporary. They were never going to be permanent migration into the country. And that's what this is recognizing. The UK does it with a number of other countries. So we will add India to that way of delivering. That's something which India was very keen on, because there's a huge IT sector that has constant flow between the two countries. And that was a big ask. And we've acknowledged the need for India to look at that. Let me leave it there. Any questions I can take from here?
From India's perspective, textile seems to be a very large benefiting sector.
Mm.
We have Mr. Anuj also. He's economist at Welspun Group. I would ask this question to both of you, but to start with Mr. Kang, to you, that with this reduction in tariff, how competitive you think textile will be in UK as compared to some of the other competing countries like Bangladesh, Vietnam, etc. And how do you see the growth really panning out?
Yeah. If you look at the sort of surrounding countries, so Bangladesh, Sri Lanka, for example, they have what's called a developing country preferential tariff arrangements, so that, you know, as a set of countries who are trying to get their economies off the ground, you know, they get very good tariff arrangements. India was a mid-income country and will carry on growing at a stratospheric rate. And so it is much more sort of aligned to the WTO arrangements. This deal will bring India into competition with the local countries. So I would say, will it change overnight in terms of people migrating factories back to India because a lot of the Indian companies were manufacturing in Bangladesh to take advantage of the lower tariff arrangements. Will it make them all come back? It won't be sudden, I don't think, but there will be a good reason now to keep thinking about why to manufacture in India rather than go abroad. Certainly, the talent pool of manufacturing garments in Bangladesh is huge, and it's a skill base that country has made and has used quite well. Certainly, as far as the UK is concerned, it's wonderful because hopefully competition equals low prices, and so imported textiles into the UK, apparel into the UK, leather, footwear into the UK. It's great.
So textile, you think that it is putting us on equal footing, but how the growth will shape will be determined more by competitive pressures from here on.
Yeah, companies will make their own decisions. I mean, where does it make sense? You know, the margins aren't huge in clothing, as you probably know. It's actually a very, very slim margin base. So you're not going to make many extra percents by moving it from one country to the other. It's just that it's more probably viable now to make stuff in India than maybe it was before.
Correct. Anuj, would you like to come in on this topic and share your view, as well as ask a relevant question to Mr. Kang? Then we'll move over to the next question.
Sure. Thank you so much for having me. So I think what Mr. Kang mentioned is very valid. I think if we talk about just broad macro, I think what is the textile sector to India and why in every trade negotiation similar to one which we are having with the UK, why that's so important. So textile makes about around 2.3% of GDP, around 12-13% of our industrial output, around 12-13% of our exports. It employs almost 45 million people, most of which are MSMEs and women. So I think in this context, the textile sector definitely stands out in any FTAs, like I mentioned, even in the case of UK. With regards to, I think, whether we will be able to latch up upon this opportunity with this FTAs provided, I think as an industry, we are definitely ready for this. I think if you look at just the numbers, I think India exports around $35 billion of textile exports. The UK accounts for somewhere around, I think, 1.4, 1.5 billion of that. And if we look at US, that is around 10.2 to 10.3 billion dollars, right? So definitely a huge market. And also if we also compare with the countries which we are benchmarking ourselves against, which is Bangladesh and Vietnam, Bangladesh is almost 4 times of India, Vietnam is almost 5 times of India. And much of it has got to do with the preferential trade arrangement which those countries have with the rest of the world, given which Mr. Kang mentioned that, the developing countries status. Funny though, the per capita income of Vietnam, given these preferences, now almost double of what India is, still it manages to get that benefit, right? I would say we do have a benefit, especially in the man-made fiber space or the textiles made from cotton. We all know Bangladesh and China have also served as a backend for China. So a lot of the cost advantage, the scale which Vietnam and Bangladesh have also got is coming in from China. But I think one way to look at this FTA is also to put in a kind of lens of the US-UK trade prosperity deal that has been announced. I think if we read the fine text in certain sectors, there has been a mention that the UK should be watchful of the supply chain, subtly hinting, I think they don't want China to be a major part of its supply chain. So I think if you put that lens on this FTA, India obviously stands out because we are not a backdoor for China. And within the South Asian ecosystem and even the Southeast Asia, we have a stable political system. We have a strong domestic demand. We have a strong macroeconomic stability. Our currency rates are fairly independently managed. They are not like, fixed to a particular country. So I think all this gives us the opportunity. And I think even briefly for Welspun also, I think we do out of around $1.3 billion of global textile business that we do around $60 million of business within the UK. We are the leading suppliers to retailers like Tesco, Argos, JCPenney, and Christie is a brand which Welspun bought in 2006. So I think from the excitement point of view, yes, we are definitely excited. We're just waiting for the deal to get signed and then kind of get into effect. The other thing I think which the industry is always wondering is whether this reduction in tariff happens immediately or is it staggered over a shorter period of time or a longer period of time? Because obviously if it's longer period of time, the excitement tends to kind of mellow down a bit. That's it.
Sure. So the last question which Anuj and Indian industry have in their mind, how and when it's going to get decided and how is really the deal going to unfold from here in terms of little timeline, process and actual implementation, Mr. Kang?
Yeah, it's quite a well-trodden path in terms of what happens now. Essentially, there's a process of what's called a legal scrubbing, lawyer parlance, which is essentially looking at the deal in its entirety because each chapter is done in isolation. Now you've got it all together. They now have to make sure there's no contradictions, nothing that one chapter says, offsets another chapter, and to, dot every I, cross every T. So that work is undergoing at great pace, at which point the treaty is finalized. And then the next step, obviously, is the prime ministers of the country sign the treaty. After that, there's a stage called ratification. The Indian system's ratification is quite simple. I think the cabinet can authorize it. The UK's is a bit more complex in that it goes to our parliament, both houses, upper and lower. Two committees exist, one in the lower house, one in the upper house. They will scrutinize the deal, they will question it. And then the parliament actually approves it. And then once that happens, it's put into law. And at that point, it comes into force. That's our process. Typically, it takes 9 months to a year for it to actually come into place itself.
So that the tariff reduction, the first phase also will be effective, say about after 12 months from now.
Yeah, if everything goes to plan, it's that sort of timeline. And on the sort of tariffs themselves, you'll have to wait till we publish the details. Some will come into force almost immediately at full range. Others will be done over time to effectively support each other's industries adjust. Rather than they get a huge sort of change, they get a gradual change. And that's something that's been also agreed.
So that's in the process of this decision making as yet.
Well, most of it's agreed. I think it'll come out once we finalize the actual treaty and publish all the documents.
Okay. But in your understanding, which are the sectors which will really benefit India in manufacturing? Will it be some engineering segments? Will it be the footwear toys segment? Where do you see that over next 3 to 5 years we can see a big change?
I mean, basically, I think we've just discussed it. Textiles, apparel will be a main beneficiary of this deal. So for India, going that way, leather, footwear, they're the other ones. Gems, jewelry, spices, tea. Those are the sort of things that are sort of headline making. But within the thousands of tariff lines, there are many others. But the big sort of industries which are relevant to India, they're the ones that probably will benefit.
Coming to you, Manish, how do you see that this signing of the treaty can bring more large, deep-pocketed investors' interest? Can it have any rub-off impact? Can it have any rub-off impact in terms of technology, services, and particularly green tech? How do you see things taking up?
Thank you, Amisha, and thank you, Mr. Kang. I think a couple of things I would mention. First, I'm glad the deal has been done. And as the saying goes, don't let perfect be the enemy of the good. So even if it took 3 years, I'm glad it is done. That's number one. And the second, I would say that we have talked about manufacturing, but we must also realize that the world largely will be driven by services. And the Western world clearly is 75% on services. Emerging market still has manufacturing. And even in emerging market, the manufacturing or the number of people being employed in manufacturing will continue to go down. And as Mr. Trump has found himself, is that even if he puts tariff and wants that Americans should manufacture more, I don't think Americans are ready to manufacture more or go back to the factories or go back to things. So largely, I would say that the world is already being driven by services, and you will have huge amount of services being offered. So any trade deal that takes account services is hugely important. And what puts the guardrails on services? We're talking about law, regulations, and how any treaty or any contracts are being honored. And I'll give you example of, I was in New York last September, and I was meeting Henry Kravis of KKR. And he mentioned to me some of the things about his discussions with Prime Minister Modi. And this was, I think, 2 or 3 years ago when Prime Minister Modi was meeting the industry leaders, and he met Henry as well. And he asked him that why is KKR not investing a lot in India? And Henry told him directly that we want to have good solvency law. And within 3-6 months, India passed the solvency law, because that is the rail on which everything works. Because if you do not have solvency law, it's all about capital. People have a lot of capital. London is the center of capital. We know that, given how many banks and capitals are. We are taking, at least from the announcements we have seen, that we are looking to reform the defined benefit plans, that we have defined benefit pension plan we have in this country. There's 1.2 trillion pound or equivalent of money that is locked in defined benefit plan, which at this time is being invested mostly in bonds, which in my mind is absolute madness, what we have seen in this country for the last probably 10, 20 years, because it has just forced people or the pension fund managers, given it's a highly regulated business, to not fund parts of other businesses, which they should. And only now, this is being seen as a big reform by the government of the day and the people who have been rallying for this. Even if you see 4 or 5% of that money go into other form of investing, whether infrastructure, green tech, whatever things that we are talking about, that's a huge amount of money that is going in different sector. And London will remain the center of capital because of not just that we have 40% of global FX trade, but it's the time zone. We can trade with Asia, we can trade with America. People want to be here. So London is at the heart of this. And that's one thing that London has to offer. If you looked at Lloyd's insurance in London, they've always wanted to have a bigger footprint in India. So I would say that those are the key places where we really need big changes for capital to start moving in. And then services can be offered both ways. So, you could have Indian law firms offering services in India, and you could have the Indian firms, offering services into the UK. To me, I would say that unlocking capital and getting capital into India is going to be the massive big change. there's plenty of capital available. The reason it has not gone is for the things that we mentioned. And as I gave example that when the change was made, it led to a lot of capital going. I mean, from all the private equity house. Private equity houses are sitting on capital. They do not have projects to invest in. These projects, they're not going to invest in China, because in US it's almost like ABC, anything but China mentality, you know, but that's what it has been told by the policymakers. And India just sits over there with a democratic country, democratic base, you know, very much similar rules and laws that we have with the UK. So we will be prime beneficiary of this if we are able to take this forward and not wait for the perfect thing to happen, but just continue to keep pushing on every aspect. And in that sense, is capital circling? Of course, I think there's plenty of capital. I don't think capital has ever been a problem. In fact, there's a huge amount of capital globally in the world. We are suffering from excess capital problem globally. That needs to be channeled to all these growth countries like India and other, subject to the agreements, the kind that Mr. Kang has mentioned and the one that UK and India has signed. So that should be a really good news for both the economies.
Sure. Now, this question goes to start with Mr. Kang, and of course, I would like Anuj to come in. How do you think the auto industry for UK will be benefiting as India is making more and more of those billionaires, millionaires, and unicorns, and the demand and dream for some of the most coveted cars would always remain and grow? How do you think that UK industry will take advantage of this tariff reduction? And what could be the broader strategy of most of these players?
Yeah, it was one of the key sort of things that we were wanting to demonstrate, that India started to become a more open economy. I mean, 110%, it's over 100%, the tariffs on cars at the moment from the UK, which is some of the highest in the world. Having said that, the premium sort of segment was already still sending in cars. So people who can afford, I don't want to name the brands, but you can work out which ones I mean. And
so two premium cars at a time now, instead of just buying one, and reduce the pressure of choice. We will buy both.
So essentially, will it make a massive dent into the Indian car industry? I doubt it. You're competing with different segments in the car sector. Correct. And certainly the larger opportunity will be the premium segment. We'll let you know when we publish what are the sort of quotas that we've agreed. So this will be quota driven for a while to make sure that both sides, car industries, don't get hit in any major way. There are also it's quota driven, it's price driven in terms of who's going to access what. So that will come out when we announce everything. It's fair to say the excitement's building up for people who are wanting the premium sort of cars and now holding their breaths to actually, excuse me, let me just turn this off. And so that, I think, is going to be a good opportunity. And so let's see.
Sure. Anuj, how would you look at this opportunity? And how do you think things will pan out, both in India, particularly knowing the kind of appetite, money, and demand that we can offer?
So I think if you look at a couple of weeks back, I think there were a lot of memes and tweets, reels, a lot of doing that, that you will get an iconic British luxury SUV for 40 lakhs. I mean, Mr. Kang has abstained from taking the name of the brand, so I'm following his footsteps, right? So that is really a kind of an aspirational brand. And I think that sentiment just tells you the capability that India has to digest or consume these kinds of goods. And I think the growth story of India is essentially the growth of the middle class, right? I think so. If we broadly break down the consumption pyramid or the population into three broad buckets, the rich, the kind of the if I can call them poor, and the middle class. I think the marginal consumption gain which brands like luxury cars or even the high-end cars will get, that will be essentially from the swelling of the middle class, neither from the swelling of the people at the bottom of the pyramid, neither from the swelling of the people at the top of the pyramid, right? So I think British auto sector, by supplying high-end or luxury cars, does tend to gain from this FTA. I think in terms of threat to the Indian auto sector, I really don't think that is much, because I think we did some analysis when the UK FTA and the EU FTA was in discussion. I think the real threat is somewhere around if the car in the UK is priced, say, somewhere around 10 to 15 lakh rupees, Indian rupees. But I think, and then if they come duty free into India, that is when the most of the Indian OEMs will tend to take a hit. But if the cars are priced locally in the UK above that price point, then I think the impact on the Indian sector is very minimal. And I think the bigger, I think, kind of, if at all, a concern would be on the EV side, because that is where, the Indian OEMs are also pricing their products at a premium price, kind of at par where the global OEMs would like to do it. And Indian government has kind of been willing to let the international OEMs come into India with some TRQs, with the commitments on the investment front as well. So I think it's only the high end of the auto sector which, if at all possibly, will take some dent. But I think given the India growth story of around 1.4 billion people growing at more than 6% per annum, the room to accommodate multiple brands and players is really, really huge. So I don't think it will be a major dent. The other, I think, if you want to look at from the Indian auto components point of view, I think if we are seeing that the demand for British auto is going to increase in a country like India, I think the export potential which comes out by way of the demand for the auto components that will be generated in the UK, that is also a huge potential that we can capitalize on.
Certainly. Manish, would you like to come in that in terms of engineering capabilities as also green tech capabilities, how the two countries can really benefit post this treaty?
I agree with a lot of things that Anuj has said, and I think if you look at and if we talk about the auto sector, I mean the largest auto manufacturer in the UK is Indian company, right? The way things are working out. But I come down to, as a macro guy, I look at something basic. Emerging markets for long have suffered from what you call the Washington Consensus, where repeatedly IMF and World Bank has told everyone that they shouldn't be running deficit more than 3%. China was the one that ignored it. If you are going to use your own capital, whether it's printed money or anything else, to grow your economy, then you can grow the size of your economy, and that just grows the consumption base. And despite this FTA that we are talking about, I think a lot India can do on its own, which is going to really benefit the Indian economy, and that just drives the consumption base. And whenever I look at the context of how South Korea and other economies have developed, a lot of these developed because of the changes that were happening locally. So I would say that while the capital is going to be welcome and capital is going to be important, a lot of things that the Indian government is doing domestically, or what they should be doing domestically, is what is really going to be more crucial, in my opinion, because that is going to expand the consumption base that Anuj talked about. Because people at the top of the ladder already have access to a lot of things that we discuss about where tariff applies, and the bottom, sadly, they will not have access to it. So your real growth is going to come from middle. And to me, I would say that when I look at India, when I look at Indian policy making, those are the things that I continuously try to monitor, how those things are changing and what people feel in that context. And as far as demand among the foreign investors to buy Indian equity, to buy Indian bond, I mean, that is there. There is a lot of demand for that. And you've seen that in the capital flow as well. And I don't think that's going to change. I mean, it might go through, asset allocation a bit underweight over, but where else are you going to put your money? given that you have huge amount of allocation going into emerging markets. So I don't think that's going to change, and these things are welcome. But I would always also stress that a lot of them come down to the local fiscal policies being formed. And in my opinion, Indian government should not hesitate to run higher deficit as long as that capital is being used for investment purposes, and more importantly, communicate that. I mean, 80% of everything is a communication strategy. You can do a great job domestically, but if you're not communicating that through your interlocutors or directly in the media and to participants, then you're not doing a good job. Because it's like somebody who's very clever, but just cannot translate what they are trying to think and do. So to me, that's what I've always found India wanting, that our communication strategy. And that doesn't mean, I don't mean to say Prime Minister Modi has to do it. I think it's everyone's responsibility. People like yourself, Amisha, or Anuj, or anyone else, was to take this thing and talk about. And of course, government plays a lead, but that's what I look at. And I have found it disappointing, like, a lot of things has been done, but not communicated. And that suddenly makes people feel about, India is not doing as well, or people are going to change. But in terms of appetite, I haven't seen any big change from where I sit in London and talk to people.
Sure. Point well taken, but internally somehow we feel that during this last decade in particular, as we ranked continuously upwards as size of the global economy from 7th to 5th to 4th and so on, we've been continuously talking about both the ease of doing business that we are changing, the voice that is needed at times in not only business but even international geopolitics, that we can have our independent voice. And of course, you very rightly mentioned that what Mr. Modi is doing is, of course, doing 110% or 150%, but we as individuals Indians should also continue to do in our business counterpart. But here I will bring Arsh. Arsh, can you just come in and take up what the audiences have written as a few questions, please?
Sure, ma'am. So, we just open.
Can you read out that questions for the panelists, please?
Yeah. So, one question is, as someone who has led both the commercial businesses and the geopolitical negotiations, how did you personally balance the tension between the outcome-based diplomacy and the long-term institutional legacy? And what changed about your own negotiating philosophy throughout the process? This is to Mr. Kang.
That's a deep question. I need to probably think that one through a little bit. But having a corporate background, I don't know if you mentioned, my real career was with AstraZeneca for almost 30 years. And effectively, you have an understanding of what business actually wants and needs in terms of being able to compete and to operate both at home and abroad. And when you have that, I mean, I ran many of the AZ companies around the world. And so you get an idea of what's important. And having that reality in your mind certainly helps to, convince both sides of what's really important. I mean, effectively, you can have a beautifully crafted document but actually doesn't add anything. And then it just sits on a shelf as a beautifully crafted document. Great, but that's not the end product, is it really? The end product is companies able to do things that they couldn't do before, or quicker or faster or smoother, depending on what we manage to agree between ourselves. And that, I think, having that reality in your head was what I always used to keep thinking back to when we were talking about various things, such as, technical barriers of trade, SPS chapters, et cetera, to say, what is it that I, as a company, would really need to be able to export something where I couldn't do it before? So I think that really helped. In terms of, did my sort of upbringing help with respect to doing a negotiation? Absolutely. It's actually not that different. it's all about relationships. It's making sure you can create a harmonious sort of environment to actually have an open, honest discussion. That can only happen when you have trust built on a very good relationship. And that's why it probably took 3.5 years to get to that point. Essentially, my opposite number, who I have an absolute phenomenal amount of respect for, we got on very, very well. Very tough, I have to say. One of the toughest people I've had to deal with. But quite frankly, it was done in a very much a win-win environment. Let me leave it there.
Harsh, I would like you to read from the chat if any questions are there.
So, Mr. Kang, do you have any comments about the carbon tax and the bilateral investment treaty? How will it affect India?
First of all, the carbon tax, CBAMs as they're called, Carbon Border Adjustment Mechanism, is not in the FTA. So just be assured of that. It's not there. Leave it there. For the bilateral investment treaty, is still under discussion, still under negotiation. And, one of the comments made earlier by the panel was that, the requirement for investment and the requirement for capital into India is huge. If you look at the sort of aspirations that Prime Minister Modi has for 2047 and a developed India, the amount of capital that needs to be attracted are off the scale. For that to happen, an investment treaty is actually a very good thing to have. Certainly, it's one of the big asks of the UK industrial stroke financial world to have a meaningful bilateral investment treaty. And so we're still discussing that one to make sure that it is fit for purpose. We have a bilateral investment treaty that was terminated in 2017. But the sunset clauses of that are still in place till 2032. So anyone who had actually invested before then are still protected by that. So I think there is a watch and wait in some areas to see what happens there. That would be my view. And I think what we're trying to sort of do here is to ensure certainty for companies. This, as a business, again, ask me, rather than as a civil servant stroke government official, if I put my business hat on, what do businesses actually really crave? They crave certainty so that they can invest. I mean, most companies have to think on a 5-year horizon. And if you have constant change and flux, it's very difficult to plan in those sort of environments, which is what most of the deals are trying to give.
Sure.
Thank you.
I bring again you over here and give you an opportunity to ask the relevant question to Mr. Kang, because you are part of the corporate boardroom, and what really will further facilitate aggressive look at the UK market. Are there any open things that you would like to ask? And I would like to also point out over here and clarify again that a lot of audiences are asking questions to us, which are in the chat box. Mr. Kang, if you think relevant and appropriate, you can choose to please read it and reply. Is it visible to you?
Okay. Yeah, that's a very long answer I need to give for that one. But suffice to say, when it comes to services, there's something like 36 subsectors where we've actually agreed how to cooperate. Certainly, that's on the contractual services suppliers, for example, and included in that, there's some new ones which actually didn't exist before. Yoga instructors, classical musicians, chefs, for example. That's something which is India asked for. So okay, fine. And on the independent professionals category, there's about 16 subsectors where we've agreed them, such as computer-related services, R&D services. But yeah, it's the IT side of it is a big thing. So we've agreed a lot of the asks in there. When you look at legal, that's something which if we were pushing very hard on, and it's actually the Bar Council themselves have started to move themselves. It didn't need us to sort of push it too hard in the FTA itself. And if you have noticed very recently, what they're proposing is to allow more of a legal presence in India. And as you know, legal services are already provided by the London-based firms on a fly-in, fly-out basis. All they were really after is to be able to set up an office here to be able to market their services. They're not going to compete with the domestic law courts. They're not going to have an army of lawyers that want to compete in domestic Indian law. And so there was a lot of confusion about legal services over the years. And I had to spend a lot of time sort of explaining what is the actual ask. So that's something which I think let's see how that develops. So the Bar Council have already started movements in the direction that we would hope to be positive about both countries.
Anuj, now I will come back to you from industry perspective. You have any more views to throw on this?
So, related to the comments just made by Mr. Kang, I was just wondering, drawing from the relationship between services and manufacturing. So, if we think of services in the sense of, relatively, I would say, high value, design oriented stuff can be done, say, in the UK. But given the cost competitiveness and the scale of manufacturing which we have in India, can the FTA kind of give a boost to that aspect of trade or cooperation between the two countries? I know some of it is already happening in the auto space. Two leading Indian OEMs already have design centers and test facilities within the UK itself. But can we expand it to, or do you see there is more scope to expand it to other sectors as well, Mr. Kang? So I think, so in both sense, the knowledge powerhouse or the knowledge economy is kind of still there in the UK with knowledge transfers to India. But what India has in terms of the labor, the scale, the cost edge, that is what it can use to its strength and, kind of capitalize on the market. So what is the view on that front?
Yeah, it's a model which is actually working well already, just to accelerate it. And as you rightly say, which are the sectors? Certainly the sort of, what is the UK good at and what is India good at? The two economies are very symbiotic in some ways. And if you're talking about sort of the R&D space, design space, the creativity space, UK does have a bit of an edge. I don't want to sort of say India doesn't do any of that. It does, of course it does. But the UK is known for that. And when you look at low-cost manufacturing, it's India. I mean, the UK could never compete in certain sort of labor-intensive industries and so on. And that, I think, is the way that the two economies can work very well. A lot of companies already do that because they know it makes sense to do certain bits in either country. There is a manufacturer of heavy equipment that does exactly that, has 5 manufacturing plants in India, does a lot of the design in the UK, and exports to the rest of the world from here. It's a model that could easily be replicated in other industries. There are, R&D intensive industries that actually already do it. Where you have life sciences, for example, companies actually do bits in either country. The manufacturing can be done in both, depending on the technical needs of either. And so, yeah, I'm very looking forward to that collaboration happening more and more so. And it's not just between the same company and their subsidiaries in the two countries, it's across companies. So you have skill centers established in different parts of these two countries. It will happen in, I would say, some obvious new world technologies coming up, whether it's cyber, whether it's quantum, whether it's sort of the semiconductor space and so on. We launched a few months ago a thing called the Tech and Security Initiative, TSI, which was agreed by the two national security advisors of the countries. And that is literally building exactly what we've just said, corridors of expertise between India and the UK in these sort of very, very future-facing industries, which are very important for both countries.
I will bring in Manish again. Manish, what if you have any key question that'll be interesting to know?
Sure. I think first I will just highlight something Mr. Kang mentioned just now, and for everyone to understand that the UK law firms, as rightly Mr. Kang mentioned, is not going to go and make laws in India. They are just there to facilitate businesses. And it's almost like, when you have a UK business going and establishing presence in India or working with India counterparts, you just feel comfortable when you have the same law firm that you worked in the UK helping you work in Delhi or Mumbai. And I think it is such an important thing for both sides to realize, and governments to realize, and Indian law firms and businesses to realize. It's a bit like, you travel with your own currency and you feel safe about it. So nobody's trying to go and print in Indian rupee. I mean, you travel with your own pound sterling. And I think this is completely it's massively important. And it is so misunderstood, and which is why you have pushbacks, right? So you have lobby groups pushing back, we can't allow UK firms to come in. But unless you allow the UK law firms to operate in India, or UK accounting firms, or whatever it may be, and I'm sure some are operating already, you are not going to have that level of comfort that you need from UK capital or UK businesses to come. And when they come in, they're also going to change the practices. They will make it better, more efficient. And then they'll bring in capital from Europe, from US, because the same firms and same lawyers are working with German capital or French capital or American. To me, this is like at the heart of where the big change is going to come from. And I cannot state enough that how important this should be for everyone to understand and for everyone to spread this word, because it's not about competing with law firms. It's about really offering additional facilities which will bring about capital, bring about businesses, because you will see a massive sea change in how when people start endorsing and everything. So I think, thank you, Mr. Kang, for doing that, because I think that is very, very vital for the growing relations between the two. But my question to you, Mr. Kang, is given your background with AstraZeneca, and of course we are seeing a huge amount of change on the healthcare and pharma sides. And I am not an expert by any means on this as you are, but my question to you is that how does this change? Does it make it better for Indian pharma companies, for them to sell their goods or to sell their produce into UK? How much of big change is going to happen? And also taking into account what's happening in the US, the US is about to come hard on, one of the main things that President Trump is working on is again to go after the health insurers and pharma companies. Does this India-UK thing really help benefiting the Indian companies who might come under pressure from what's happening in the US?
Yeah, it's quite. Remember what I said about stability?
Yeah.
It's quite a difficult situation when it comes to that part of the world. Certainly, if you look at the Indian companies, they supply a significant proportion of the medicines consumed by our National Health Service.
Yes.
It became plainly obvious during the pandemic just how much of it was supplied by India. And partly the FDA was born as a result of that conversation, by the way, because at that point, India was helping us with our supply chains of medicines. We were helping India with oxygen and other things that were required for each other's healthcare requirements at the time. And certainly the deal that we have isn't going to change anything for the Indian pharma industry going into the UK. It's what they've already had for a while. There was a demand for tighter IP in India. And there was a huge resistance I actually got a letter from many, many people, knowing that my background being a pharma industry person, that, you shouldn't do anything that will upset the supply chain of medicines into everywhere, India and the rest of the world. And there was never any intention to do that. What was required was the ability for international companies to be able to patent their products in a timely manner without unreasonable objections, which were sometimes done for competitive reasons, as opposed to there was a real reason for an objection, and so on. They were the minor things that were asked for. So I would say nothing to be of concern to the Indian pharmaceutical industry. My one thing that I've said a million times now, that the Indian industry is moving up their value chain. They are now creating innovation. They are now creating good R&D. They themselves will need tighter IP protection themselves.
Correct.
So at some point, that realization will happen, and the Indian sort of IP system, which, it's there, but it just needs to have an enforcement capability, which maybe need to be tightened. That'd be my sort of...
Sure. And the second question, not on the pharma, but on the IT sector, which is again a big export that India has. Are you seeing this as more as a market access deal, or is this something which genuinely the two economies, and I mean both India and UK, because UK clearly is seeking to have better relations with countries outside of EU and sees India as a big thing. But have you seen this push coming from India as well in genuinely growing things up, and not in the state way that we have seen in the past, businesses operate, but is it a genuine push to grow that size of this business?
Yeah, I mean, it's where the world's going, isn't it, at the end of the day? The question is, do you do it all at home, or do you actually look for synergy, and do you look for partnerships? And that's what companies are already doing. Like I said earlier, it's not that we're going to suddenly revolutionize how, a big IT player is going to resource themselves. The demand in this space is pretty significant in both countries. And that's why you've got the big Indian IT companies having big centers here and big centers there. And actually the ability to move people around for their sort of short-term assignments is what was the key requirement.
Over to you, Amisha.
Yes, with this, I bring this session to an end, as we have run past 11 minutes our time. Thank you, all of you, for your time. We are looking forward to buying 2 cars, that too luxury, for intellectual alignment better in terms of services, be it in education, legal, or accounting. And we bring prosperity to both the countries and the corporates and individuals much better. Thank you so much, everyone.
Thank you.
Thank you very much.
Thank you so much.
Have a good day. Thank you.
Bye-bye. Bye. Bye.